Yesterday, the broader S&P and NASDAQ indices moved away from a key short-term moving average level. Today, with the gap lower, we are seeing a retest slash break of that moving average, threatening the upside potential for the indices and for the U.S. stock market. I'll talk about those technicals in this video, so let's get started. Looking at the hourly chart of the S&P index, we moved above this black line. This black line represents the 50-hour moving average. It's a short-term moving average, yes, but when after a trend-like move here, you need little victories, and the victories come off of the hourly chart with work to do. What I mean by that is that we break above the 50-hour moving average, but you see this blue line up here. This represents the 100-hour moving average. You see this 38.2% retracement. This represents the 38.2% retracement of this move to the downside right here. And so those become the targets. Those become the work in progress for the technicals. But as you can see, that was not the case. Toward the end of the day yesterday, we did see a move back to the downside into the close, and we have this gap opening with the price now of the S&P moving back down to and briefly through the 50 hour moving average. That level comes in at 5623.68. The low price came in at 5617.46, and current price is trading at 5622, right near that moving average level. So be aware of that moving average. If we do start to trade more below that level, that could increase the bearish bias and have the buyers turn to sellers in the S&P index. Let's take a look at the NASDAQ index next, and this too broke above its 50-hour moving average in trading yesterday. We actually moved above it and then kind of followed that moving average down through here before finding up late buyers in the day. But like the S&P, we did see a move back to the downside into the close, and this gap in trading here today has taken the price back below the 50-hour moving average. This is a more conservative break below the 50-hour moving average and tilts the bias more to the downside for this indice. If we are going to go higher, we need to break back above the 17636.35 level. Absent that, and the sellers are still in control, we'll look toward this gap here as another target on the downside. And then, of course, we have the double bottom coming in play down here at the 17238 area, where we based not once but twice, maybe even three times right here before moving to the upside. So sellers are looking more in control on the NASDAQ index. For the S&P index, we're testing a key support. It's up to those moving averages to help determine the short-term bias for these indices. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.